and welcome to this week's MFB News. I hope you're all incredibly well. I have got so much to go through with you this week, and we've got a limited edition product, we've got criteria changes, we've got lenders offering money out for retrofitting EPC properties D and below. We've got information on the MEES energy performance bill. We've got information on rental yields, on house prices, and also on predictions on base rates. So lots to cover off this week. But I do hope you're really well. I hope the last week has been really kind to you. We had a great time at the Property Investment Show. It was so lovely to see so many familiar and new faces as well. For those of you who came and spoke to us, thank you so much. So look, without further ado, let's get cracking. Now, whilst we have got an action-packed agenda, I have to say it's been a relatively quiet week in terms of lender repricing. Swap rates have come off the boil actually. So last week they were hovering at 3.95 to just over 4%. This week we're down to 3.887 as of 11 o'clock last night. This is because the situation with the oil has come down slightly, so oil prices have eased. So that's really, really good news. So swap rates are just kind of sitting at a sort of high threes, which means that actually lenders' ability to really make any significant changes to interest rates are really sort of stymied. Having said that, we have had an exclusive, a limited edition product launched from Paragon in the last week, which actually is pricing up incredibly well. So what are we looking at? So we're looking at a 5-year fixed rate at 4.75% with a 3% fee. This is available 70% loan to value. There is an application fee of £299 but a free valuation. Now, in terms of Paragon as a lender, we talk about these guys often. We have a great relationship with them in terms of both just kind of an ongoing relationship, but also with the underwriters as well. And actually we find that they are so incredibly landlord friendly. They really understand landlords, they really understand the letting of property. So really they're just a great match for our clients. In terms of their offering, they're able to send to individuals, limited companies, layered limited companies. They don't mind how many properties you've got in the background. They do need you to be earning £25,000 a year of income. That can be made up of various sources, including rental income. So we don't tend to find it's too difficult to meet that requirement. They can do day one remortgages, so you can buy a property, add some value to it by doing some works, and then they can look to exit against open market value inside of 6 months. They can lend on HMOs of up to 20 rooms and multi-units, so blocks of flats or more than one self-contained unit on one legal title of up to 20 units. So really, really generous offering. And the rate that they've brought in, when I do the roundup on pricing, you'll see it gets mentioned as one of the top pricing deals at the moment. So well done, Paragon, and thank you. Now, we've seen some further changes, albeit some rather minor ones. So I think the most significant is that the Yorkshire Building Society has lowered their semi-commercial rates. So semi-commercial would be a building which has an element of commercial and an element of residential to it. So I think the obvious example of this would be a shop with a flat above, but it can encompass many different kinds of structures. So they've reduced their 5-year pricing on semi-commercial. So rates are now starting from 6.45%. Now that might sound quite high to some of you, but actually in that space, this is really, really good, and they're lending up to 70% loan to value here. I've seen Clydesdale make some very, very minor adjustments to their pricing. So their rates are now from 4.47%. Clydesdale, very vanilla lender, so they're only lending to individuals with really just 1 or 2 buy-to-let properties. Why is that? Because what Clydesdale do is, rather than use a rental calculation against the individual property, what they're doing is looking at your overall income and your overall expenditure. So unless you are a really, really high earner with a portfolio of properties with no debt on it, you're going to find it's very, very hard to get through with these guys unless you've got only maybe 1 or 2 properties in the background. But look, a keen price, and it works for some borrowers nonetheless, so great to see them bring their rates down there. Now, Aldermore, an interesting one this week, they have made the decision to start offering free valuations on all purchase transactions as well as remortgages. Now, Aldermore are a specialist lender, so all those things that we would expect. So they do SPVs and also trading companies as well. They can consider layered companies. But what they have is an offering which is quite interesting. So they have what they call a multi-property rate. So when we take more than one property to them, we're just going to be mortgaged at once under one mortgage account. So one mortgage secured against more than one property. Now, there are pros and cons to these. The pros of these would be that, first of all, it's one mortgage account, it's one set of paperwork. There's only one legal fee because it's only one set of conveyancing, albeit there'll be sort of individual kind of administrative costs per property. So some people really like these. The downside of it is that you have, if you were to sell off one property from the portfolio, you would be forgiven for thinking that if you sold the property for £100,000 and your mortgage debt was at 75% loan to value, then you would expect to be able to pay off the lender 75% of the sale price and keep the remainder. It's not a given they'll let you do that, and this applies to all portfolio lending. They can allow you to take any kind of surplus equity back into your own name, but that's not always the case. They can decide to retain that as well. So some people have been caught out on this in the past, so just something to be aware of. Now, the pricing on their portfolio range is actually quite competitive. They price this slightly cheaper than if they're lending on individual properties. But I think what's really great here is the free valuations, but also there's no application fee. So lots of lenders at the moment are saying, okay, you know, there might be a free valuation, but they're still going to charge you £200, £300 up front to underwrite the application initially. Aldermore don't have that, so that's really good. Now, we've seen the Cumberland make some reductions on their pricing. Cumberland are a lender we use a lot for holiday lets. They're really, really good at these. Variable rates from 4.98 now and 5.78 on fixed rate terms. And Vida have also made reductions to their pricing, so their rates are now from 5.29%. You know what I'm going to say, watch out for the fees. And that's really kind of everything from the lenders. So we've talked about lender pricing, we've talked about swap rates. So just a quick roundup on where we are. So personal rates on straightforward properties, your 2-year fixed rates are now from 3.69% and your 5-year pricing from 3.94%. And that's come down ever so slightly. So I was just referring back to my previous notes. The last time we did a roundup of pricing, your 5-year fixing here was 3.99%, so it's come down ever so slightly. Limited company rates, and I'm going to split these out as usual. So 2-year rates from 4.19 if you don't mind paying a 4% fee, or 4.79% if you'd rather pay a 2% fee. I'm sure you'd rather pay no fee, to be fair. 5-year pricing, so 5-year rates from 4.19 with a 7% fee and 4.65% with a 3% fee. So as we said in previous weeks, all we're seeing now is just very, very small minor adjustments. And this is not because lenders' cost of funds has come down. It's not because the market has really moved on and everything's about to drop. This is lenders making very, very small changes, just trying to drive up some new business volumes. Now, Vida have made some changes to their criteria for expat lending, which is not something we talk about very often, but actually at Mortgages for Business, we do have a fairly broad contingent of expats who have buy-to-lets in the UK. So what Vida are saying is that they're actually extending the range of available countries where the borrower can be living, and it now includes Hong Kong, India, Egypt and Monaco, amongst others. So when we're looking at expat lending, what you tend to find is lenders will want to lend to people who are only based in FATF countries. Obviously, this is down to kind of concerns over money laundering and that kind of stuff. But also, there's also some lenders have even more restrictive covenants. So as an example, weirdly, Australia is one which some lenders steer away from because there's regulations in Australia in terms of financial services companies marketing to their residents. So there's kind of a restriction around the kinds of countries that people can be living in. So it's great that Vida have gone back, revisited theirs and opened things up a little bit. Now, they are saying that the expat offering is available to first-time landlords. So what this means is that you have to have a property in the UK already, but actually if this is going to be your first proper investment, they can consider lending to you. There's no minimum income requirement as well with Vida Home Loans. So that's a really, really good offering. And they could also extend their expat offering to include HMOs and multi-units of up to 6 units or bedrooms in a HMO. So really, really nice to see Vida making some changes there. Now, the Coventry have done something in the last week which I really, really like actually. So what they're saying is that they're supporting borrowers with retrofitting, and they're bringing out what they're calling their Green Together reward scheme. So this means that for all eligible buy-to-let and residential clients who make qualifying energy efficient improvements to their properties, they're going to give you £500 contribution towards that, which is really, really commendable. Now, there are a couple of T&Cs here worth mentioning. So first of all, you need to spend at least £2,500 on the improvements. This is available to both residential and buy-to-let clients who applied for a new mortgage or changed their existing mortgage or terms after 28 September 2021. And what they're going to do is validate your claim with Trustmark, and then they're going to pay you the £500. And there are 20 types of energy efficient improvements that you can make to the property. Now, I think this is really wonderful. So one of the things with the green agenda in terms of the mortgage market is that lenders are offering preferential interest rates to those people who are bringing to them properties which are classed as green, so EPC ratings of A to C, which is very, very commendable. And actually, of course, it's great that we want to kind of encourage people to have green properties. But actually, this really is a massive problem with existing housing stock in the UK not meeting those EPC requirements. The fact that Coventry are recognising this and actually offering an incentive to people for actually making those improvements is absolutely wonderful, and I sincerely hope more lenders look to follow suit. Okay, MEES, the EPC deadline for EPC properties to be a C or above looks to have been changed. There was a bill that was published on the government website yesterday, fairly quietly I would add, which is called the Minimum Energy Performance of Building Bill. And reading through this summary document, and it's 6 pages long, it talks about private rented properties, and what it says is that the Secretary of State must amend the energy efficiency regulations to require that, subject to subsection 2, all tenancies must be at least an EPC band from the 31st of December 2028, where practical, cost effective and affordable as defined under section 1 brackets 4. Now, this really, I think, is just confirming what we've previously heard, that the date for the MEES being brought in to be C or above has been pushed out, which I think in itself is kind of welcome news, but nothing really earth-shattering. The bit that kind of threw us slightly is that there is reference to applying for exemptions, and one of them is the cost of carrying out the works to fulfil the duty would exceed £20,000. So previously an exemption limit of £10,000 had been mentioned, but actually the information in the bill is saying £20,000, which is really, you know, much higher than anybody was expecting. Now, it does also refer, as I just mentioned, to practical, cost effective and affordable as well. So maybe there is going to be, once this kind of comes out in the wash, some kind of caveats there, which means that actually £20,000 isn't necessarily the limit. And maybe it's going to be relative to property's value, for example, because £20,000 on a property worth £1.5 million, you know, it's a lot of money, but as a percentage terms, it's quite negligible. £20,000 on a property worth £50,000 is incredible. So I think the devil will be in the detail, but we really wanted to share this with you as it's very hot off the press, and I expect you'll see a lot more chatter about this in the next couple of days. Okay, rental yields, and I love talking to you guys about rental yields at the moment because it is one of the good news stories that I can share. So Fleet Mortgages have done their buy-to-let rental barometer for quarter 1, and it's shown that in England and Wales, rents rose from 6% last year to 6.5% now. So average yield across the UK, in England, on rental properties is 6.5%, and this is up from 6.4% average in Q4 2022, and the highest on record for the barometer. Now, what they do say is this has been put down to a rise in the short supply of rental stock, high tenant demand, but also the easing of house prices. And I think that last bit is the kind of key point here. Actually, have as a yield, have rents actually increased? Well, yes, they have, because it's relative to house prices, but with house prices coming down, you know, maybe that's only to be expected. Now, what they go on to say on a more granular level is that all regions recorded an annual and quarterly rise in rental, except for the northwest and the southwest, where declines of 0.1% and 0.2% were seen. An annual rise of 0.6% was recorded in the East Midlands, the South East, East Anglia and Greater London. And this puts rental yields at 6.5% in the East Midlands, 5.7% in both the South East and East Anglia, and 5.3% in Greater London. The North East offers buy-to-let land was the strongest yield at 8.8%. That's incredible, isn't it? With an annual increase of 0.4%. And Wales reported the highest yearly growth at 1.1%, with an average rental yield at 7.6% in Q1. I mean, they're really strong yields, aren't they? The average rental income across all regions came to £1,345 per month, up from £1,256 in Q4 2022, and that is a rise of £135 since Q1 last year. So very, very interesting reading there, and really just kind of reinforcing what we all know, that rental yields continue to perform really, really well and are remaining very robust. And finally, just to wrap up with house prices. So first-time buyer house prices have risen to record highs, but overall, the average price of a property coming to market rose by just 0.2%, or £890 to £366,247 between March and April, which is lower than the 1.2% rise usually seen at this time of year. So the Rightmove House Price Index said that lower than average 0.2% rise suggests that agents were advising sellers to price modestly to attract buyers. And this was compared to a 0.8% month-on-month growth in March, and annually asking prices were 1.7% higher than April last year. So year on year, we're still in gains territory for now. The average stock held per estate agent rose from 43 in March to 45 in April, so more properties coming to market, while the average number of days it took to secure a buyer fell from 57 days to 55. Tim Bannister, Director of Property Science at Rightmove, said that sellers are now understood they need to tempt buyers with more competitive pricing. So look, I just found that really interesting. I feel that actually what we're seeing here is that there is slightly more properties per estate agency branch available, but these properties are selling quicker. And actually, you know, like I say, year on year, we're still in growth territory in terms of house prices. So things seem to be performing a lot better than some people predicted. And that's me for this week. Thank you for joining me. I hope you found that useful. And if you have any questions, you know we'd love to hear from you. 0345 345 6788. Have a fantastic long weekend. We've got 3 of them in May, haven't we? Which is quite wonderful. So do enjoy yourselves. I hope the weather's nice, and I will see you again same time next week.